Hello everybody, my name is Alisha Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. The market for stocks, and you could say for all assets, is unpredictable, volatile, and you never know what you will be greeted with in the morning. This is a video about my thoughts on what you should do and what your thought process should be. Now, to invest, especially in individual stocks, but in general, you need to be mentally strong and ideally do the opposite of what everybody else is doing. If everybody else is fearful and selling, you should seize the opportunity and buy when the assets are cheap. And conversely, when everyone thinks they can't lose and the price will only continue to go up, that's when you should be selling into the greed. The market has a cycle. People get excited as the market goes up and they keep buying into the euphoria phase, even though the market is overvalued compared to the fundamentals. And this is the easiest but the worst time to buy in. Greed has set in. The market gets overpriced and realizes it and starts going down. People hold on because they think they are long term investors. Then the market keeps going down and people sell out at the bottom in total fear just to make the pain go away. This is when the dispassionate, quote unquote, smart money gets in, buying at a discount. At the market bottom, which happens next, the amateur investors sit in cash, afraid to go in while the market recovers because they're expecting another leg down, while the professionals keep buying. As the market rises and the easy money has been made, the amateur investors gain confidence, and as the market gets near the top, the amateur gets enough confidence to get in to the market again, but they are missing out on most of the gains and they are getting in at the top. The most important thing the experts say is that you need to be in the market invested all the time, because if you are jumping in and out, you are going to seriously harm your portfolio's performance, as studies have shown. So, what is my strategy for the stock market and what is my mindset? I realize I am unable to time the market even reasonably, let alone perfectly. I will not be able to find a bottom to buy nor a top to sell. I've never tried to time the market actually. If I were to think the market will go down because of an upcoming election, for example, I will do nothing. Because the alternative for me is to sell off my 60 plus stocks and mutual funds and sit in cash on a hunch. And there I would stop getting the dividends. I would pay hundreds of dollars in the trading commissions as I was selling. I would have to pay a bunch of capital gains taxes all at once, and I would throw my portfolio into disarray. And the worst thing is, I could be completely wrong, and the market could keep going up while I sat in cash earning nothing. Even if the experts think the market is overpriced, it could go up for another 6 months. So timing it is impossible. And so I will never try to time the market and get out at the top on a hunch. But for the sake of argument, let's say I were to sell everything off and the market did actually go down in 2 weeks after I sold everything. When do I get back in? After the market's down 5%, 10%, 15%? You have to be right on the timing there as well. So I stay invested at all times, putting spare cash into the market because the market goes up in the long run. So in 5 years, I will still be up. Now, I do keep a small amount of cash as an emergency fund whenever possible. Let me say that. The other thing that I do is that if there's a drop of more than 20% from the last peak in the overall market, I buy more cheap assets using my home equity line of credit as an extraordinary purchase because the market is on sale. It could go down more, but when the market comes back up, which if all is right with the world, it always has in the past, I will look pretty good. If I had elected to be proactive, I would be guessing. So I have elected to be reactive. There's no solid, repeatable way to be proactive and write consistently. And Also, don't forget that each time you have to be right on the exit and you have to be right on the re-entry. Sure, the 20% loss is unpleasant, but I know how the story ends. The market will eventually come back. And what if the market only went down 15% and I never bought anything? Well, at least the market came back to where it was. I don't have enough money to start buying at 5% down, 10% down, 15% down. I only have one shot at it, so I wait until it's 20% down and then I borrow. So I hope you got some insight on the psychology of the market. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.